won't stop till I hear him say,
Here at CYPRX, we trade a strategy that allows us to generate an edge in the market via whatever pair we're trading, whether it be a commodity, crypto, or Forex pair. And I'm going to show you that in today's video breakdown. Okay, what is going on, everyone? Welcome back to another CYPRX video breakdown. Massive video breakdown for you all today. Breaking down some price action on GBPJPY, a trading pair that we consistently trade here at CYPRX. I want to first share this tweet with you all. We're going to go into detail. I'm going to share my strategy with you guys. Again, breaking price action down as to how it was that we were able to capitalize on a beautiful risk to reward ratio on GBPJPY. I want you all to seriously consider, if you're involved in the cryptocurrency markets, whether it's you're a long-term holder or a day trader, are you here for quick gains? Are you here for quick fixes? Or are you here for the long term? If you're one of those individuals that came into this crypto market space and you had this idea that you were going to put money into this market and get this quick return, right? Really consider taking on day trading. Day trading, not only the Forex markets, but also commodities, has allowed me to seriously control my emotions during this bear market and realize profits outside of the cryptocurrency market during this bear market in the crypto space. So again, this is not financial advice. This is just how we approach the markets here at CYPRX. I'm going to give you guys an extreme detailistic breakdown as to how we were able to capitalize on this beautiful risk to reward ratio on GBPJPY. Smash that thumbs up button if you all enjoy video breakdowns like this. We do appreciate the love and the support. I'm going to give you guys my top-down analysis, talking about risk sentiment in the market. We're going to be talking about trading with higher time frame, giving you guys an detailed explanation on being able to identify retail money in the market, waiting for their positions to be swept before we react to price action, identifying areas of interest, how it is that we do that here at CYPRX, and then being a reactive trader and not an impulsive trader, and then setting up a proper risk to reward with confidence, pulling the trigger, and having logical take profit areas, right? So before we get into that, I said to you all on the Twitter space, February 19, 2023, the number one reason most retail traders lose, in my opinion, again, I've been involved in this market for 7.5 years, been a mentor now for 3.5 and running, is because they lack independent thought. Instead, they think someone else's market decisions will make them successful. The fact still remains that the majority of people neglect their privilege of thinking for themselves and become the victims to a large degree of the faulty thinking of those nearest them or whom they watch on social media. The majority of individuals out there buy and sell this market, whether it's crypto, commodities, or Forex, based off of somebody else's bias. Here at CYPRX, we trade a strategy that allows us to generate an edge in the market via whatever pair we're trading, whether it be a commodity, crypto, or Forex pair. And I'm going to show you that in today's video breakdown. So we're going to start with number one that I have written down here for you all today, which is understanding risk sentiment in the market. Now, overall, we were trading GBPJPY today. You have to understand overall the Great British Pound against the Japanese yen. What is each currency? The Japanese yen being a safe haven currency and the Great British Pound being a risk-on currency, right? If you don't know what a risk-on currency is, just to put it in simple terms, a risk-on currency is often used to describe a currency that tends to appreciate when there is a higher appetite for risk in the markets. To put it in kind of simpler terms, it's when investors are more willing to take on risk. And these currencies tend to perform well when investors are more risk averse. And that's what we traded here today, Great British Pound against the Japanese yen. Now, the Great British Pound is often considered a risk-on currency because of its historical tendency to appreciate during periods of global economic growth and positive market sentiment. So just starting off, okay, higher time frame analysis before we get into technical analysis. I read fundamentals in the morning. I don't do too much fundamental analysis. I'm predominantly a technical analysis trader and a psychological analysis trader. I rarely pay attention to fundamentals, but I still do keep them in the back of my mind because at the end of the day, the macroeconomic perspective, geopolitical woes, monetary policy is all what drives FX rates in this market, okay? And when you understand that, you don't need to have an in-depth perspective about it, but in my personal opinion, you need to have at least a general understanding about it. Well, this is the first article that I saw today, right? It goes on to say, a risk-on mood improves. Remember, keep in mind, the Great British Pound is a risk-on currency that usually appreciates when there is an improvement in the risk mood, okay? So it goes on to say the positive shift witnessed in risk sentiment is weighing on the US dollar and allowing the pair Euro USD to climb. So that was the first article that I read this morning. I didn't need to dig any further, knowing in the back of my mind that the Great British Pound is a risk-on currency. That was the first confluence today as to how I was able to take this trade to support my thesis that we were going to see some bullish price action this morning on GBPJPY. Now I want to take your attention to the higher time frame. So remember, adding to your list of confluences to give yourself an edge in this market, again, an edge in this market, meaning a list of confluences that could potentially generate a higher probability for a trade to go in your favor. Nothing in this market is guaranteed. Here, as a retail investor, I myself, as a retail investor trading against other retail investors in this market, am simply here just to attempt to create a list of things in this market that I see on a consistent basis that give me a solid risk to reward ratio for a trade to potentially go in my favor on a consistent basis. Okay. Again, not every trade that I place is a winning trade. However, the strategy that we trade here at CYPRX has generated us a consistent winning ratio. With that being said, we're going to go into trading with the higher time frame. All right. So I want you all to take into consideration, this is just going to be a real fast higher time frame breakdown. Overall, just looking at the market, okay, we barely trade with indicators here at CYPRX, but when we do, we utilize the triple moving average. I'm not going to go into detail with my settings on that and whatnot. That's for the CYPRX students. However, we can clearly see that on the 4-hour time frame, we are in a bullish trend on GBPJPY, where the market is consistently making higher highs, drastic discounted pullbacks, tapping into areas of discounted price where the banking institutions scoop up more orders and drive price higher, leading to new market swing highs in the market. Currently, where price action was operating at during this New York session was at a discounted price from where banking institutions bought from during previous sessions on the 4-hour time frame, taking my Fibonacci tool to show you guys that price is discounted from the higher low that was previously created to the higher swing high in the market. You guys can see that the market is currently 66 to 70% discounted from its previous higher low in the market. With that in mind, here at CYPRX, we attempt to trade with the trend, with the order flow on the higher time frame in the market. And just based off of my technical analysis this morning, I was seeing that we could potentially be making a higher low in the market on the 4-hour time frame to take price higher on GBPJPY. With that in mind, I attempt to generate a trading bias on the lower fractal nature price action, i.e. the 15-minute and below, trading in the direction of the higher time frame. So if I'm analyzing that the higher time frame is bullish, at least based off of current price action information, that means that on the lower time frame, I'm going to look for buying opportunities to move in tandem with the order flow of the higher time frame. So we have number one in mind, that there is a risk on market mood improvement in the overall market space today, which usually has a tendency to drive the price of the Great British Pound higher. Why? Because the Great British Pound is a risk on currency. Number two, we have trading in tandem with the higher time frame. As of right now, what it is that I was seeing in the market during this New York session was that the 4-hour time frame is bullish. Now we're going to go on to number 3, 4, and 5, being able to identify retail money and waiting for their positions to be swept in the market. I want to take your attention now down to the 15-minute chart, where we talk about specific sessions in this market, i.e. Asia, London, and New York, and being able to identify liquidity in the manipulation window prior to every single session. I want you guys to see, again, I can't give you guys specific times, that's designated for the CYPRX students, but in the beginning of every single session, we have, or at least we here at CYPRX trade what's called a manipulation window, where we attempt to avoid the market at the beginning of every single session. Why? Because this is when the majority of manipulation exists in the market. And here you can see prior to the New York session, we have early sellers in the market and early buyers in the market that were attempting to guess market direction based off of whatever price action they were analyzing before New York session actually played out. Here at CYPRX, we know that institutions are not selling from these short-term or intermediary lower highs. Institutions have sell positions all the way up here at premium positions or highs in the market. Retail money is what exists in the form of chasing bearish price action, facilitating orders when price action has already moved away from a premium area where market makers are attempting to entice retail positions in the market chasing bearish price action because they know that retail traders chase these types of bearish candlesticks. Okay. With that being said, the same bias generates in the form of early buyers beneath lows. If I was to retrace price action, going back in time, utilizing the rewind button, we can also imagine that in this manipulation window, orders exist in the form of retail supportive methodology traders trading some type of imaginary support in the form of this double bottom formation that formed prior to the meat of the New York session opening and when price broke out of the manipulation window. So number 3, I had written down identifying retail money in the market and waiting for this liquidity to be swept before we become market participants. So again, we cannot see liquidity in the market. We can only attempt to try and determine where that is. So right now, I want you all to think about it in the form of retail positions. There's most likely retail buyers attempting to buy up this quote unquote support, again, which does not exist in the market, and institutionalized traders do not trade these methodologies. So they're attempting to prematurely buy this New York session dip right here based off of some imaginary support that they're seeing in the market. And then they're also retail traders above highs attempting to sell this price action with stop losses above these highs, when here at CYPRX, we know that institutional orders rest above these highs and not these short-term highs here. Okay, so we have retail money identified in the market that we are going to attempt to trade against here at CYPRX during this New York session, which we identified prior to the manipulation breakout of the New York session. Okay, keeping that in mind, we're going to move on to number 4, which is identifying areas of interest where we can become market participants, reacting to price action and not impulsively trading because of emotions, because of candlesticks, because of imaginary chart patterns that don't exist in the market. So how do we do that here at CYPRX? Well, I want you guys to pay attention to a pattern that we teach you all here on the CYPRX YouTube that plays out multiple times that shows us that institutions are interested in buying price at a certain level and not taking price any lower. So I want to take your attention to an area of interest that we had drawn on our charts, and I'm going to show you all how we were able to identify that. As always, here we know what the market maker pattern looks like here at CYPRX, which is a pre-engineered low in the market, a sweep of that low, a break in market structure, and a failure swing low in the market, leading to bullish order flow, which is higher highs and higher lows. This is the institutionalized pattern that shows you that market makers do not want to push price any lower, respecting psychological levels to the downside, and instead are going to attempt to do what? If they're not going to grab liquidity from lows, that only leaves them one other option to profit. That is taking money from highs or liquidity that exists above highs, activating sell stops above highs, whatever the case may be. If they're not going to target lows, there's only one other place for them to target, and that's highs. So here is the institutionalized pattern, taking your attention back to Wednesday of last week, March 1st, 2023. You can see a pre-engineered low in the market that was set during the opening of this trading day. You guys can see Asia session set a pre-engineered low in the market. London session was the move that completely liquidated all of that money out of the market. And New York session was the session that created a failure swing low, instead created a higher low in the market that led to a fractal break in market structure, printing a higher low that led to a bullish continuation where the market makers continuously printed higher highs and higher lows after that, okay? Failing to break this higher low in the market during this New York session. We identified this by highlighting from the candlestick bodies down to the wick and extending this over to the right-hand side. We've told you all multiple times on the CYPRX channel how we identify areas of interest is the higher low that comes in when we're looking for buys after the sweep of liquidity. Well, if here is the sweep of liquidity and this is the higher low after the sweep of liquidity that takes price higher, this is the area after the market was manipulated to take out all of that pre-engineered liquidity in the market, where the market maker started to buy up price for the first time, which also came in at a major psychological level, the 16300 psychological level. So knowing how the market makers buy in the form of time and price at psychological levels, we identified that area of interest again by highlighting from the candlestick body down to the wick, and we extended that over to the right-hand side. Interestingly enough, during this day's worth of price action, we're now going to jump down to the lower time frame, and I'm going to show you all how we were able to wait for price action patiently to come down into our area of interest and enter into this market based off of higher time frame discount, based off of market risk on mood improving, and based off of waiting patiently for retail money to get manipulated in the market, setting ourselves up for success with the proper risk to reward ratio, and having logical take profit areas based off of where retail money still exists in the market. So once price breaks out of this manipulation window, again, remember, during this New York session, our area of interest for banking institutions, knowing that this area, the 163.00 psychological level, is where banking institutions bought from before. Based off of what I've taught you guys on the YouTube space and what I've displayed to the CYPRX students, we know that banking institutions like to buy at a discount from where they previously bought from in the past. Well, here is an area of interest where we saw at the 163.00 psychological level, after the market was manipulated, the banking institutions created a higher low that drove price higher, breaking previous market structure, creating the definition of bullish order flow from this psychological level. So this, during today's New York session, was our area of interest to wait for price action to come down to. We've already identified on the 15-minute chart pre-engineered lows in the market during New York session, where early buyers in our manipulation window, let me change this to our orange manipulation box, exist, where we can imagine retail money pre-engineered into the market are chasing these bullish candlesticks because they do not know or understand anything about the manipulative tactics that the banking institutions use, which is to entice retail money to chase candlesticks with orders above highs, selling price action, and buy orders beneath lows, buying up bullish candlesticks. We've already identified that. We know that there's early sellers above highs prior to the New York session open that were chasing the market from all of this bearish price action that started during the London session. We also know that prematurely to the New York session, retail traders are attempting to guess bottoms, and they're buying up price here underneath of these lows before price action breaks out of the manipulation window, drawing some type of imaginary retail supportive methodology. Half the time, I don't even know what to call it down here, right? Retail support or some type of double bottom formation that they're attempting to draw on, thinking that price action is going to respect some type of box tool that they draw on their charts, okay? Not understanding the markets correctly. And here at CYPRX, us understanding the markets correctly, we simply waited for that price action to get taken out of the market. Any buy orders that existed prematurely in the market prior to the London session beneath these lows were our first areas of interest for the market makers to liquidate. Sure enough, as soon as the market breaks out of the manipulation window, let's play some price action out, and I'm going to show you guys exactly what the market makers did. They, as soon as price broke out of the manipulation window, came and attacked any early buyers that existed beneath these lows in the manipulation window, pushed price straight down into a discounted price, again, that 163.00 psychological level sweet spot that we had identified all the way over to the left-hand side, where during that Wednesday last week on the 1st of March, we had identified this is the area of interest where the market makers bought price up after manipulating the markets, failing to create new swing lows in the market or the definition of bearish order flow, and instead created bullish order flow or new swing highs and higher lows in the market, right? With that being said, simply all we had to do after that was give ourselves a solid risk to reward ratio, not exposing too much of our capital, and we entered into the market with buy stops. Now, let me explain that to you guys surrounding number 5, which is setting up a proper risk to reward and logical take profit areas. You guys can see my MetaTrader 5 entry right here is my screenshot. You guys can see I entered in at the 163.091 level. I actually entered in with 2 buy stop orders, one being at 163.091 and the second one being at 163.135. So you guys can see my first buy stop order was triggered right here. Now, let me solidify every confluence that I'm giving you guys in today's video breakdown as to how we were able to hold confidence that this trade was going to go in our favor. Think about it from start to where we are now. Number 1, we had a risk on market mood improvement. Knowing that the Great British Pound is a risk on currency, this drove us to consider that we were going to see an appreciation in the Great British Pound. Number 2, we have the 4-hour time frame operating in a discounted price of 66 to 70% from where the banking institutions on the higher time frame bought in previous sessions. Number 3, we have identified liquidity in the market in the form of retail money existing above highs where we could potentially seek to take profit from, and beneath lows where we know the market makers are going to attempt to sweep liquidity from in order to accumulate enough orders to drive price higher and build that momentum on the higher time frame. Moving on to number 4, we have waited for price action to come into our area of interest, and instead of being impulsive traders who impulsively chase the market or bearish price action heading into this New York session, we waited for price action to come into an area of interest that we set up for ourselves by identifying psychological levels, identifying proper structural formations in this market that only market makers can create, identifying those areas, and then dragging them over to the right-hand side to be market participants if the market comes back into those areas of interest and respects them, which they have done. Now we're on number 5, leading into how we were able to hold confidence that this trade was going to go into our favor. So remember, from number 2, we had identified retail money in the market that exists above highs. What is another thing that I teach you guys here on the CYPRX YouTube channel if you're still here? Identifying trend line liquidity in the market and trading against that. Well, here you guys can see the triple touch of a trend line potentially forming, where retail traders most likely are chasing the market, taking some type of sell position above highs. You can imagine that their orders in the form of sells exist all in these areas. Think about it. Here at CYPRX, we attempt to trade against the retail herd. What do the institutions do? They trade against the retail herd. Our first take profit areas in the form of logical areas where the market makers will be targeting are above these highs prior to the New York session, where the first area of retail trendline liquidity comes into fruition, where we can imagine a bunch of retail orders exist in the form of sells above these highs from people that were chasing the market during London session and selling from a manipulation window lower high in the market that was already preset and pre-planned for the market makers to come and scoop liquidity out of. Now, I know that my charts look a little bit chaotic right now, but watch how this all plays out. It was absolutely beautiful price action today. The buy stops were triggered, and we had a beautiful risk to reward setup trading with the higher time frame on GBPJPY. And look what the market makers did. They immediately came and targeted all the early sellers prior to the New York session, after having first targeting all the early buyers prior to the manipulation window breakout, tapping into a discounted area where the banking institutions to a T bought from the previous session, respecting psychological levels, having logical take profit areas. We were able to secure a solid 1-to-4 risk to reward ratio on this trade breakdown. Many blessings to you guys. Again, I know that this could be a mouthful. Go back, rewatch this video breakdown, consider some of the notes that I have given you guys today. This is not even scratching the surface of all the technical analysis that we give to our CYPRX students. We are not indicator-based traders here. We trade zero indicators here at CYPRX. Nothing but naked price action and valuable information in the form of the way that we approach the markets here at CYPRX. Many blessings to you guys. As always, the link is in the description down below if you want to join our mentorship program. Over 60 hours of course material going in depth as to how we approach the markets here at CYPRX. As always, be cognizant, be aware, smash that thumbs up button, subscribe to the channel before you head off here, and I will see you all in the next video breakdown.
I won't stop till I hear him say